SnipeGoat, baby. Welcome. Now we're gonna dive straight in. We ain't gonna play no games, Another week down, another week to go. So let's just tap on right on in. Price is inside of this bullish expansion here. After this swing to swing, this bearish retracement, and now price is encountering this bullish continuation, which is another bullish expansion. And we see what price is doing currently here on the monthly time frame. Encountering and producing this bullish expansion. This is current price action to determine what price is doing here on the monthly time frame. Of course, we have to scale in. We're going to go down to the weekly to determine what price is doing inside of that monthly time frame on the weekly, or inside of the weekly price action. So as we can see, we know price is bullish. On the monthly time frame, price is bullish. On the weekly time frame, price is bullish. So currently, on the weekly time frame, this is the price action that price produced to encounter that monthly bullish expansion. This on the weekly, this is the price action that we encountered to produce that monthly bullish price action. So here on the weekly, as we can see, price bullish, creating this monthly bullish expansion. Now, price swing to swing, price produced this retracement, as we know, encountering and establishing equal highs and equal lows, a ranging retracement. Price then pierced the lows and then reversed, targeting the highs, encountering and establishing, producing another bullish expansion with this bullish continuation from this retracement, right? So now currently price has produced this bullish expansion. Since then, price created this ranging retracement where price produced equal lows and equal highs. And we know order of operations, bullish impulsive move, followed by a ranging retracement or ranging corrective price action where price produces equal highs and equal lows. After a bullish expansion, we will want to see price come down, pierce the lows, reversing, and then target the highs to give and produce another bullish expansion as we did here. But now we know what price did here. Once price produced these equal highs and equal lows, we seen price target the highs first that let us know and signal to us, that let us know and signal to us that price is on the verge or about to reverse. Now, this price action, so as we can see, price produced these equal highs and equal lows, and then price targeted the equal highs first, which put us in the mindset and the understanding that price was going to reverse and start targeting lows based on the price action that price produced, based on what price did. We knew what price was going to do next. And we want to say likely, what price was likely to do next. You can say that too, but I mean, it is what it is. The chart speaks for itself. So this same price action here, this same reversal price action, is the same reversal price action that we produced here. Price, order of operations, price, bearish impulsive move, followed by a ranging retracement, ranging corrective price action, creating equal highs and equal lows, followed by a bearish impulsive move. If price was going to continue to the downside, we would have wanted to see price come up and pierce these highs and then target the lows. But after this bearish impulsive move and followed by this ranging retracement, price targeted the lows first, reversing and targeting the highs, giving this bullish expansion. You see what I'm saying? So this same thing, same price action is happening here. So now we can anticipate price to target these lows that price has produced in this bullish leg or this bullish expansion, creating that monthly bullish leg. Now we can see that the buying is done due to the price action that price encountered. The buying is done for this bullish leg, and now price should start targeting equal lows and creating, establishing, and respecting equal highs based on this price action, which is reading the candles, understanding price action. So now, knowing that, knowing the narrative of the higher time frame, we can scale down to the daily to get a more or better microscopic view of what price is doing inside of these higher time frame. What is price doing on the daily at these higher time frame levels? So as we can see, price came up into those equal weekly highs. Price produced this bearish engulfing, reversing, targeting the equal lows that was produced in this bullish leg to the upside. We got this flush to the downside on the daily time frame. With this flush after price encountered the equal highs, we see price come down and target the equal lows. Objective complete. So with the objective complete, we can now look at price and we see what did price do here on the daily time frame inside of these higher time frame levels. We got this high, swing high to this swing low with price producing this bullish engulfing here. Bearish engulfing into this bullish engulfing with the price action that we just broke down, targeting the highs and then targeted the lows. We can now anticipate price to retrace based on the price action that we are seeing here in this bearish leg. Price was establishing equal highs. As you can see, these equal highs was took after price came into the equal lows, the weekly equal lows. We got this reversal, letting us know that this bearish leg is complete. This bearish leg is done. So now we should see price start creating equal lows and targeting equal highs, which is we have this set of equal highs here, and then we have this manipulation level here where price pierced or came up above this high and reversed, and then we have the, of course, the equal weekly low, meaning the equal weekly high level. So we have a um, level or a zone of resistance that we can anticipate price to retrace up to encounter a bearish continuation to the downside, just based on what price is doing, based on what price has produced, what price is doing. This is my analyzation up to this point. This is how I'm reading the market to understand what price is going to do next based on what price did. So we see what price has done, and then with this swing low here, we produced this bullish engulfing, and over the weekend we have been encountering this internal retracement inside of this bullish engulfing at these equal weekly low level, and as we can see, price produced the equal daily lows here. We got this pierce, we got price to show respect, and again, like I said, we took out those equal highs, letting letting us know and signaling to us that this bearish leg is done. we should start seeing price turn bullish. And this bullishness would just be a retracement, and we can anticipate price to roll over when price get up here. So coming into this week, looking at this price action, um, I would start looking for price to establish and create equal lows to target these equal highs. And we just read price action at these levels to determine what price is going to do next. Now, granted, price came up, took out those highs, and then came right back down and took out these lows. But we are at this significant level. We're gonna read, scale in to determine what price is doing. So now, here on the 12-hour, inside of that daily price action, most recent swing of what price is doing currently is this bearish move here. This swing to swing, price came up, came right into this 12-hour snipe zone, coming into and piercing the equal highs that were established inside of this snipe zone. And as you can see, price showed respect, and you can see this continuation that price has produced. And in this continuation, what type of price action is this continuation? Is this continuation from this snipe zone impulsive, or is this continuation corrective? $1 million question. Is this continuation? Because we know continuations is a continuation of a trend, of a impulsive move, of liquidity, of the market pushing the liquidity pushing the market in a certain direction. So price coming up into a level that produces a continuation, that continuation should be impulsive. If the continuation is giving corrective price action, then we can analyze that price action to um, basically lean towards price reversing rather than price continuing that trend if the continuation is not impulsive. So as we can see, we got this impulsive move up into this snipe zone, and then this is the bearish price action that followed it. One candle up, one, two, three, four, currently 5 candles down, and price is inside of this bullish engulfing. So we are encountering a bearish internal retracement from a 12-hour snipe zone that price should produce a impulsive move from. Now, we're just reading price action. So as we can see here, and when price came down into the swing low of said move, we got this candle print, where you can call this candle print a hammer. And also just coming into this swing low of this move, price showed respect. So we can also um, identify this as a failed continuation, which also will put us in the mindset of a reversal where price will push up. We wanted to throw the fib on. This is what it would look like. Right? Price came into the take profit level 1. We know price coming into take profit levels, this is the reaction that you should get, or you will get a reaction with price coming into take profit levels, because we know money is coming out of the market. So that's the price action here on the 12-hour. Now we can scale down to my handy dandy 90-minute to determine what price is doing on the 90-minute inside of that 12-hour price action. So as we can see here on the 90-minute, price is bearish. Price is still bearish here on the 90-minute. Most recent swing here on the 90-minute, swing to swing, and 15 minutes left. So 15 minutes left. This move will be live because you will have this swing to swing. If this price closes bullish, that will be producing this internal structure here on the 90-minute. And again, as you can see, this is the snipe zone of this 90-minute move. But also, we just know what to look for. We know price here on the 90-minute is bearish, creating and establishing equal highs to be respected, to continue price pushing down. So looking when price start pushing up, where will price create these equal highs to signal to us that price is getting ready for another bearish push to the downside. So this is what price is doing currently. This is how I'm reading price action. This is how I'm analyzing price action at these higher time frame levels to determine what price is going to do next, simply based on price action and market structure, and just following the money. Where is the money? Liquidity pushes the market. Like I told you before, a lot of people say fear and greed, but liquidity is what pushes the market. And when you learn and really understand how to follow liquidity with the market, is like you're just reading money. You're reading order flow. You're reading, you're just reading money. This is how you read money. Reading the candles, following the money, following liquidity. So this is what price is doing currently. We see, patience. It's all about understanding what price is doing, what price has to do for the market to move. Price has to produce these liquidity levels to make price, go in a certain direction. So, I'll tap into the 4-hour for my 4-hour folks. This is what the 4-hour time frame is looking like at my higher time frame levels. See what price is doing here. So again, we know price is still bearish. This is how we're reading price action. We know what price is doing. We know price can for sure keep coming down. That's why we just scaled into the lower time frames price action to see what price is doing now that price is here at this level, and we see the price is still bearish. And if price was going to reverse here and start coming up, then we will see that on the lower time frame. But until then, this is what it is. This is what it does. But yeah, you heard it here first, baby. SnipeGoat, the candle reading guru. Somebody go tell your favorite trader's favorite trader.